when I was just starting out trading, I always used to hear people say supply and demand, order blocks, ICT, smart money, whatever. And I always used to think, this strategy must be hard, this must be the holy grail or stuff like that. But it's actually not that hard, it's actually not that complicated if you don't want to go further into depth with it, right? So in this video, I'm going to be sharing with you supply and demand, right? I don't want to say order blocks because I'm not going to be going much into depth about all those further concepts that you want to, those people, ICT and smart money, you want to complicate things much further. Not complicate because I don't want to say order blocks, because I know that you guys, you smart money guys and you ICT traders will butcher me in the comment section saying that I don't know smart money and all that stuff, right? So this video is just supply and demand, simple, straight to the point, order blocks, right? And as for me, I don't want to complicate things for me. I just want to keep things as simple as I can, right? So that I just know when to enter, where my stop loss is, and where my potential TP is, and whether it's worth it to enter the trade and risk my money. That's what I want to know. I don't want to be able to understand why the market is doing what it is doing and stuff like that. So first of all, I want you to understand the concepts of what supply and demand. What is a supply? First of all, okay, let me just go straight to the point. Right, so what is a supply? Right, so a supply is a selling area where we sell, right? It's where the market is selling momentum, right? So let's say currently I'm in Zimbabwe, not currently, in fact I'm in Zimbabwe, right? I'm in Zimbabwe, right? So let's say we're growing maize, right? Maize is the staple food here in Zimbabwe, right? So let's say it's just after the rain season and there was no drought and stuff like that. Everything is good, everyone is made. So that's like the supply, right? So when the supply is too much, right? They've got a large supply over here. What do you think happens, right? So they've got, everyone is maize, right? Everyone has got maize, right? And nobody wants to buy maize at this point. Why? Because almost everyone needs it, right? And if you overprice your maize, right, no one will come to you to buy, right? So obviously the price will drop because there's too much supply in the market, right? So that's what supply is. You can even use any example. If it's bananas, you can even use any example for this. You can even use bananas if it's the season for bananas, or if it's the season for majanje. Is in any season, right? When the supply is too much, the price will drop. But what happens when it's demand right now, right? So let's say there was a drought, right? There's very few people with maize, right? And just imagine you are the one with the maize in your hands, you are the one with the keys in your hands, right? You are the only one with the little maize left, right? And imagine that a crowd of people right over here want that maize. What are you gonna do? Obviously, even if you say one bag of maize is costing $12 and nobody has it, of course, out of all this population, right, you just want a few people to buy, because even you don't have that much maize, because you know that you can sell it to everyone won't have enough, right? So of course, right over here, when there are a few people in the market, right, when the market is not saturated, of course the price is going to rise, because there is a demand for maize, right? So let's take, even for example, right now Valentine's is coming up, right? The demand for, let's say, chocolate is obviously going to be higher. Why? Because that's the season. Everyone wants chocolate, roses, whatever it is, right? But any other season, any other normal season, nobody will even be looking for chocolate. So it's the same thing. Even if, let's say, you're buying a raincoat, if it's rain season, of course the demand for raincoats and umbrellas, the price is going to rise, right? But if it's winter, who is looking for a raincoat in winter? So of course the price will drop. Same as for blankets and jerseys, right? So that's a simple concept about supply and demand. But how are we going to be using it? Of course, this example, I've given you this example to understand what the supply is, so that you just know the correct name, right? But that's not going to be helping you to enter, right? Why? Because even if you know that if the price does this is not supply and demand that you're learning. Is it commerce or economics? Whatever. The information I've shared so far isn't going to be working on our charts, right? So what do we have to look for on our charts, right? So on the charts is just as simple as the last previous candle to the previous sentiment, right? So let's take this for example over here, this bullish run over here, right? So what we want to mark is the last candle, the last red candle, last bearish candle before the what? The break in market structure, right? So over here, this is the last red candle over here. This is the why do I keep messing this up? This is the last red candle before this what? Break in market structure over here, right? In this area over here, let me mark this on its own, right? And this also over here is the last bearish candle before this what? Break in market structure again, right? So this you can also mark as a what? As a demand zone over here, right? So it just goes on like that, right? So over here, let's take this for example, right? So you will be able to mark what? This over here first of all. Actually, let me use the proper order block, the proper what? Box over here. And so what you just mark is this whole candle from the beginning to the end of that what? To the end of that candle over here, right? That's what you mark, right? So that's your what? That's your order block, right? And also over here, from the beginning of that red candle up to the what? Up until the end. Whatever. It's hard to draw. Okay, so but I think you get the concept, the basic concept of this, right? So as you can see over here, this one I last marked over here, I'm not considering it that much as an order block. Why? Because this last red candle over here didn't give us quite that break in market structure we'll be looking for, the break in market structure that we'll be anticipating, right? So it didn't give us that, right? So I'm not going to be considering this as a valid order block, right? So that's the one criteria that we'll be looking at, right? So over here we've got what? This order block 1, 2, and this also over here, this last red candle over here before this break in market structure is also an order block over here, right? So that whole region is what? Is an order block, right? And over here, right? So let me just explain over here how we're going to be getting our entries, right? So when the market pulls back to this area over here, right? So let me delete this over here, right? When the market pulls back over here, what we want to look for is our candlestick confirmations, of course, right? And just like any strategy, that's why I finally realized that this actually isn't the holy grail. Why? Because just like any other normal strategy, it doesn't work always. It's not 100% perfect. Nothing's 100% perfect. Just like we are not 100% perfect, right? So over here, what we're going to be looking for is when the market comes back into this region over here, right? We're going to be looking at the candlesticks. How are they behaving? What are the candlesticks? What's the behavior that they are showing us, right? So if you haven't learned about candlesticks, if you don't know that much about candlesticks, I've posted a video, right, about candlesticks. You can go check it out so that you will be able to understand exactly what we'll be looking for, right? So over here, the only candlestick confirmation that I could have had was it's actually hard. Why? Because yeah, I can see that there's a slowdown in momentum right over here, but the only reasonable place to enter I would have entered was over here, right? Though it's not a complete engulfing candle. Why? Because this green candle over here did not engulf the previous whole red candle, right? So this I actually wouldn't have gotten an entry here. Why? Because the market didn't quite break that much, right? But as for me, I know, knowing myself, I would have considered it a bullish engulfing candle. Why? Because I don't want to get my entry late, so I would have considered it right, and I would have already entered this. For me, I know what I would have done, right? But when I see this drop in momentum, this red candle, this rejection of the upward move, I would exit. The market, right? So it would have also ended in break even. So if you haven't learned about candlesticks, I advise you to watch the previous video to actually learn about candlesticks, because it can save you a whole lot on the times to enter, and it can save you a lot of bad entries, right? So over here, let's delete this, right? So over here again, right, we've got a pullback to this region now, right? So we've got an engulfing candle over here, so to have entered over there, we could have entered over there, right? Though this one we could have just entered, though as you can see I actually extended a little bit, but of course we would have entered over there maybe, right? And then over here we've got another pullback, right, creating a W over here, right? And over here I would have entered again over there, right? So as you can see, this one actually worked, right? And you actually have what a lot of confirmations in this case, right? We've got our slowdown momentum, right? We've got our what? So like a wedge like wedge flag, like confirmation pattern, right? After that impulsive move. So this one was actually a very sweet trade to catch, right? You would have made a whole bunch of money. I'm actually thinking how much I would have made over here. Ooh, some sweet money. Oh, that's sweet. Okay, anyways, let's continue. Right, so that's what we have to look for. And for a supply, what are we looking for? We're looking for the last green candle before a break in market structure. Right, so over here we'll be marking something like this. Right, this is the last what green candle before this break in market structure over here. This is the last green candle before this break in market structure over here. This is the last candle before this break in market structure. So I think you get the whole concept of this, right? The last green candle before the bearish move, right? And when the market pulls back to that area, right, we've got our engulfing candle over here, right? So we entered over there, right? And our stop loss goes above, a little bit above the order block, right? So that's how we enter, right? And first take profit is the previous high or the previous low to be formed, that was formed, right? So yeah, the first TP is usually 1:1, 1:1.5, somewhere around there, right? It depends, right? Depends on how deep the pullback is, but sometimes it can go even to 1:3. That's the beauty of this strategy. And you can also use order blocks when there was what? You can also use order blocks. They actually work when those times when the market doesn't pull back exactly to our resistance, right? That's when you'll be able to use what? To use order blocks, right? So over here again, this is the last red candle before the break in market structure over here, right? So pull back to that area and we continue going up, right? So it's just as simple as that, right? So yeah, I think there's nothing else that I can say over here. So yeah, go practice it on demo first before you go live. Go get the hang of this, right? Before you go live, everything you have to practice it until it's so like just like a muscle. You have to train it until it's the best shape, is in the shape that you want, right? So go practice this out on demo first before you go live with it, right? And also trade the trend. Yeah, I don't want you to lose a lot more money, right? And learn candlesticks. Why? Because this strategy doesn't work always, right? So yeah, like this over here, right? As you can see, there's no drop in momentum, so only enter when there's a candlestick confirmation. Don't just enter because the market is at a supply zone or at a demand zone. Wait for a candlestick confirmation. So yeah, that's it. And remember, you are the bridge between where you currently are and where you want to be. So only you can do the hard work. Nobody's coming for you. So peace.